Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar and with me is Ekta Batra, and these are the top stories this Thursday afternoon. Stocks trade firm on the back of a good crop of earnings report. The global uncertainty reins in the optimism. Realty metals lead the gains while utilities healthcare drag.
Midcap IT names KPIT Technologies, Coforge and L&T Tech Services gain on positive management commentary. L&T Tech guides for 20% revenue growth next year. Coforge is positive on margin expansion. KPIT Technologies is confident on maintaining business momentum.
City Union Bank jumps after its CEO gets an extension of 3 years.
Syngene gains on a healthy four-quarter show. The margins come in at a four-quarter high, so that stock continues to be in focus. Hello and welcome to Midcap Radar. I'm Ekta Batra. You're watching the show at 1:30 p.m. this afternoon. Well, it's turning out to be a session where we're quite stable for our markets. We have the Midcap Index, which is up around 0.5%, and the advanced decline ratio, which has managed to maintain a steady pace through the trading session. So we have over 2,000 stocks which are advancing to around 1,400 stocks which are declining as we speak. As you can see, Bajaj Finserv has moved to the high point of the day. It's really the insurance business which will be the unknown in terms of the Bajaj Finserv numbers. As you can see, the gross written premium is up around 13-odd%. The net profit as a whole is up around 31-odd%. It already consolidates the Bajaj Finance numbers, which we already know. So the consolidated revenue up around 25-odd%. But let's talk about a couple of numbers then. Shoppers Stop is in focus. That particular company reported what was a strong set of Q4 numbers with a strong operational performance as well. Gross margins expanded over 300 basis points. We have Venu Nair, the MD and CEO of Shoppers Stop, who's joining in now to discuss the earnings as well as the outlook for the business. Mr. Nair, hi, welcome to the show. It is a revenue growth of around 29%. Your gross margins are up over 300 basis points. Your operating margins have expanded significantly as well. Can you tell us what exactly went right this quarter? What were the same store sales growth like? What was the private label revenue this time round?
Thanks for having me on the show and good afternoon to everyone. We had a robust set of numbers and as you rightly said, it is quite something that we are pleased with. It's a reflection of the strategy that we had put in place a couple of years back, and we've been consistently stuck to that strategy, implementing that strategy, and that's what's working. The three strategic pillars that we have on the back of the partnership that we have with the national brands, private brand having a robust growth in the quarter of 35%. Beauty, which is our second strategic pillar, growing again robustly at 29%. And our expansion, where we've now, in the quarter, we added one department store and one beauty door. And for the year, we added 11 department stores and 11 beauty stores. So all the three pillars firing, which is what's helping the growth that we are seeing.
Particularly wanted to talk about beauty. That's about 16.8% of your revenues. It's grown well. It's up 29% in terms of a revenue growth. But sir, there is a new competitor, and a competitor with very deep pockets. I'm talking about Tira. Are you worried about growth slowing down due to more competition in the fray? And will you look to up your investments into the beauty segment to ensure that growth remains and sustains?
The beauty market is just starting to evolve. And if I just give you some broad numbers, the total beauty and personal care market is 1.8 lakh crores. That's the size of the beauty market. Look at the premium beauty segment, which is the segment that we operate in. That's about 14,500 crores. And if you look at the total revenue of all of the beauty players put together, including us, and just to remind everyone, we are the largest beauty players in the physical space. Our turnover in excess of 800 crores, grown 29% year on year, as I just said. And even with that, the total share of the market that is being occupied is still very small. Add to that, the per capita consumption of beauty today is 980 rupees. Globally, it is 4 to 5 times that, between 2,800 to 2,900 rupees. So just three factors to look at. One is the opportunity for the premium beauty segment to grow from 14,500 and take a much higher share in that 1.8 lakh crore share. Second, the per capita consumption to grow from 980 that it is today, which is a fourth of what it is in even emerging markets, leave aside the developed markets. And hence there is enough room for a number of players to grow. It's actually good that we've got more players coming into the market, which helps to expand the market, as well as with our own distribution network that we had, which we have now set up, Global SS Beauty, where we have now 15 exclusive brands. It actually gives us the opportunity to expand our beauty business further.
So, the worry is that before the market expands, the competitor may actually eat into your share, which could hurt, right? Because growing the pie eventually takes some time. But go ahead, Ekta.
Oh, okay. Well, Mr. Nair, just wanted to touch upon the fact that, yes, there is competition coming in. The size of the beauty market is extremely large. But is there a need to possibly scale up in terms of capex? So what I mean is that, are you going to be launching many more departmental stores, standalone stores as we go forward? What is the target for FY24? And more independent tie-ups. For example, you have an exclusive tie-up with NARS. Any more that we can expect, and something which could probably be at a more rapid pace as well?
Absolutely. Expansion is key, and omni-channel expansion for us. We've opened 11 beauty doors and 11 department stores last financial year. This financial year, we will open between 12 to 15 department stores and between 12 to 15 beauty doors. And that's the pipeline that we have for the next 2 to 3 years coming. And that's a pipeline which we can already see. Adding to that, expansion of further doors through our Global SS Beauty. We have NARS. We also have exclusive partnership with a number of L'Oreal International Distribution brands like Prada, Mugler, the Ralph Lauren, to name a few. And with the skincare brand Clarins, which is being relaunched in the country as we go forward. So all of these, the exclusive partnerships, higher number of international brands, greater number of doors, and a complete omni-channel experience through our SS Beauty standalone stores combined with SS Beauty app gives us a larger reach in the beauty segment as the market expands.
Any capex number that you have in mind for FY24 in terms of spend?
If I give you a indication from the last year, and that would be a broad guidance. So we spent 82 crores on new stores, and we spent close to 60 crores on renovation of our existing stores. And all of this was funded from internal accruals. And it's a similar number that we will spend for this year as well. And I'm again also pleased to report that it is all from internal accruals.
Okay. How much money are you getting from e-commerce right now?
We are an omni-channel retailer, and we look at our sales across online and offline put together. Our digital sales per se grew by double digit, even as our store sales grew at the rate of 30-odd%, which is not a true number because of the fact that last year, January, there was a COVID impact. But digital sales continue to be robust. It is omni. We know that over 80% of our sales today, the journey starts online, and that's why we continue to overemphasize on the customer experience on shopperstop.com, and that's something which we will continue to invest in even as we expand our physical stores.
Private label business, it's been growing at 35%. Will it sustain?
We would expect to not only sustain but grow that even further. Private label or private brands had its best year ever. It's the highest number of, this is the highest sales that we've ever had. Stop, which is our own private label, is a #1 brand. Life is, again, a large brand, 100 crore plus. and growing at healthy double digit. And even as we do that, we have other white spaces that we are still not catering to. One new brand which we launched during the quarter is URU, which is targeted at the plus size customer. And that's had remarkably sharp success, because of which we've expanded it from the 10 stores that we launched it to we are taking it to 50 stores. Similarly, footwear is another category where we see opportunity. We launched 2 brands, Fratini and Life, and going forward, we would also be launching Kashish in the footwear category. So that's the second space that we see as an opportunity for growth. So not only would the existing brands continue to grow in the space that they have, but also the newer brands that we would bring in. Being careful that each brand that we bring in is sharply focused.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Shoppers stock. The stock is up around 4.5%. But one set of stocks which are really firing away this afternoon is the entire Bajaj Group stocks. After Bajaj Finserv came out with its numbers, Bajaj Finance, which came out with its numbers yesterday, has moved to the high point of the day. So it's up around 2.8%, followed by Bajaj Finserv, which is up around 2.6%, and Bajaj Auto, which is up around 2% as well. So strong moves coming in on all 3 counters this afternoon. And in fact, all 3 of them have picked up anywhere between 2 to close to 5% in terms of market capitalization on a week-to-date basis as well. So good going for all 3 of these counters. Bajaj Auto at the high point of the day. Time for a short break. On the other side, Rakesh Nair, who is the management of Supreme Petrochem, will join in to discuss their Q4 numbers. Stay tuned.
I'm slow. I'm a tortoise. But your wealth managers, they shouldn't be as slow, you know?
Choose Nuvama. We move at the right pace because we only do what's right for you and your money. Nuvama. Let's do it right.
I am heat. AC gone.
Blue Star on.
Blue Star fast cool inverter AC with voice command. Bye bye heat. Blue Star.
गुणवत्ता की बात चली है, एक नई शुरुआत मिली है, परिवर्तन को गले लगाकर अपनाएंगे ज़ेड। प्रोडक्शन भरपूर बढ़ेगा, प्रॉफिट भी अब खूब चढ़ेगा, काम को नई दिशा दिखाकर अपनाएंगे ज़ेड।
Register with Ministry of MSME's ZED certification scheme today. Making the future truly forward and charting a path towards gender parity.
We are well on the way to integrating women into all roles, all ranks. That is what the Navy is looking forward to.
A mega initiative to make gender parity an attainable reality. HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective.
Presented by HSBC.
Co-presented by HCL Tech.
Knowledge partner Deloitte. Industry partner FICCI. Associate partner Reliance Industries Limited.
Can you start banking with Asia's safest bank instantly? Yes, you can.
But can I also find a branch before I finish this?
Yep, on your phone and at 500 plus branches in India.
And what if I need a bank for my business?
We've got you too. For not just small businesses, but for the really big ones too. Live more, bank less. DBS.
Welcome back. Let's move on to another corporate conversation now. Supreme Petrochem is the next company on our radar. They've delivered a strong quarter, big expansion seen in the margins on a sequential basis. Is the growth sustainable? To talk more about the earnings picture, the exports outlook, we're joined by Rakesh Nair, the ED of the company. Mr. Nair, afternoon, and thanks so much for joining in. First, if we may talk about the
Afternoon.
margin expansion, what led to the margin expansion to levels of 15%? And is it sustainable, or can you improve margins from here on? And if yes, what would be the key drivers or levers?
No, quarter on quarter, our sales were high, and the domestic market was also good. So that's what led to the increase in the margins. As far as the when we look at the if you look at the year on year, actually, the margins are low this year because last year the margins were very high because of the global deltas were very high, and that because of the increased very high ocean freights and also disruption in the supply chain, the margins in the year 21-20 were extraordinarily high, but now the margins are at normal levels. And now, as far as going forward, our volume growth will lead to our improved margins and in absolute numbers also, and also in terms of the realizations.
So margins are sustainable, or will they improve?
I won't call scalable or improve because right now I won't rather guess on the margin numbers because the margins are also determined by many external factors and the global factors. But as far as the volume growth is concerned, we are targeting almost 15 to 17% volume growth this year.
What did you
and that
close
gives us the
FY?
confidence. Sorry?
Sure. What did you close FY23 with when it came to volumes?
The FY23, we had volumes of 286,000 tons. And as far as the coming year is concerned, we will be almost 15 to 17% more than this.
Okay. Sure, go ahead.
So this improvement in your volumes of 15 to 17%, is it partly on account of the incremental capacity which comes on stream? You have phase one of a project which is scheduled to go on stream in June of next year. So this 15 to 17% is pure organic volume growth.
No, the next year what we are talking is the new product, that is the mass ABS, which should be going on stream sometimes next year. This this capacity is coming from the expansions we just completed in the last quarter. That is of our new line of polystyrene and expansion of expandable polystyrene at both our locations in Maharashtra and Tamil Nadu. And though these expansions and the new line will give us additional capacities this year.
Okay. Based on the capex coming through and the volume growth that you're envisaging of over 15% on a year-on-year basis, what do you think you can scale up your revenue to? Say you did around 5,300 crores or close to that in FY23. What do you think you can scale it up to in FY24?
See, the volume, the revenue is also a factor of the raw material pricing. Considering that the raw material prices stay constant, so our revenue line will also almost go up by the same numbers.
What's the outlook on exports? How much did it contribute to your revenues?
Last year, our exports were down because we were catering more to the domestic market. We did not have capacity to cater to the export market. Now, with the expansion coming through, we would also be focusing back on the exports. And the last year, our export volumes were only less than 10%. But this year, we intend our export volumes to be around 20% of our total volumes.
Where are you seeing the maximum amount of uptake or opportunity when it comes to the export market? You export to around 100 odd countries, but if you could give us a sense in terms of where exactly you're getting the maximum orders from.
The orders come to us from Europe, the Gulf, and also the North Americas.
Okay. All right, so we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the management of Supreme Petrochem talking to us. It's been a strong quarter for them. They are also quite bullish in terms of what they would achieve when it comes to volumes next year. And not to mention that they would be renewed focus on the export market. It was around just about 10% in terms of volumes in the previous year. We need to take a short break, but we'll get you more on stocks as well as the markets once we're back. Stay tuned.
अभी तक मटेरियल आए नहीं, पैसे नहीं है। अच्छा,
यूप्रो कैपिटल का ग्रो एक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
We are all different, but our soul is the same. We go wherever life takes us. And we do it in our own way. Because it's our differences that make us who we are.
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
After the resounding success of India Inc. On the Move 2022 in Gurgaon, this year we're coming to Mumbai to explore how sustainable practices are the key to long-term success of the manufacturing industry. Get valuable insights from industry luminaries, experts and policymakers on how your business can prosper with this new paradigm for growth. Only at Forbes India and CNBC-TV18 present India Inc. On the Move, Sustainable Manufacturing, powered by Rockwell Automation.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family. Am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
Welcome back. Well, for the markets, it's picked up a little bit of pace, you'd have to say. So, especially for the broader markets, the Midcap index is up around 0.6%. It's at the high point of the day. So, there are a lot of stocks which are buzzing around, especially on account of earning results, result reactions or ahead of their numbers. Do watch out for City Union Bank, where there was, the extension of the top management. So that is up around 5.5%. Glenmark Life Sciences is coming out with numbers today. So do watch out for that one. And Glenmark Pharmaceuticals, which owns majority stake in the API manufacturer, is up around 3.8% at this point. So there are a lot of stocks which are managing to keep your interest in the market. But L&T disappointed, L&T Tech rather disappointed the street on margins even as revenue growth was strong. Rima, tell us more.
Well, Q4 was actually a pretty decent quarter. Their revenue growth was at 2.9%, ahead of street expectations of 2.4%. Yes, margins came in slightly short of street expectations, but generally most of IT has come out with subdued set of margins. Their FY24 guidance was also healthy. The company is guiding for a 20% top-line growth, which includes 10% on the organic front. What I think the street likes from the management commentary is the margin outlook. Now, margins for L&T Technology have been around 18% for the last couple of quarters. But they did an acquisition called SWC, and this acquisition was going to get integrated 1st of April. The fear was that they will dilute the margins quite significantly. What the management told us that in FY24, margins will be at 17%, so just about 100-150 basis points lower than what they've clocked in FY23. And two, they also said that they will get back to the 18% margin band by first half of FY26. And overall, what they had guided on the margin dilution post the SWC acquisition, they're actually going to be doing a lot better than that. So that is something the street has latched on to, that the margin performance is not going to be as bad as what the street had feared, and the stock has run away. Listen into what the management had to say.
With the amortization, etc., all the expenses put together, we've guided in the 17% range is where we will be for the year and the quarter as we move forward. And we have an aspiration to get back to the 18% levels in the first half of FY26. So that's as far as the margins are concerned. If you remember, when we came back, when we did the acquisition, we'd actually guided 180 to 200 bips lower, but we've slightly been able to improve that when we came in with the 17% range back in terms of the EBIT guidance.
All right, on that note, we need to wrap up on this show, but thanks very much for watching. Your Stocks Up.